Hey everybody, it's Melissa and Steven, and we're back with another topic affecting influencer finance. I would say one of the most stressful things about being an influencer is doing self-employment taxes. So when you are running your own business, you're having all these different types of people pay you. A lot of times it can get very complicated. So today we're going to break down some information on doing your taxes as an influencer and talk about write-offs. What else are we going to talk about, Steven?
We're going to talk about tax strategies and just other tips and tricks that make your life easier.
Yeah, and we'll definitely break out more information in the future. We just wanted to give kind of an overview video out there since I know so many of you are preparing for tax season.
A lot of the reason that people think taxes are scary is because they do not want to try to do it themselves. They don't want to read about it. And that, when you have no knowledge, you have no power. So the first thing that I would just suggest is to read just a little bit about how taxes work. Mm-hmm. Probably the most important thing for an influencer who is making money is knowing what your expenses actually are. So when Melissa is saying what you can write off, what we mean by that is every business, hopefully, has some revenue and has some expenses. And if you're tracking your expenses appropriately, that can significantly offset your revenue in ways you may not expect. So for example, if you're a DIY influencer and you buy a tool to do a project, that's an expense. If you make $2,000 on the project, but your tool costs $1,500 because you bought a table saw to do it, that's a business expense. You really only made $500 on that project, even though you're writing off the cost of that tool.
That's an expensive table saw. So can you write off part of your house?
Oh, that's a great question. And that's something that I think a lot of people don't think about when they think about a deduction. If you can prove that an expense is ordinary and necessary, that is how you know you can write something off. So a home office is a really, really good example. We have a home office in our house. Mm-hmm. It is completely dedicated to Welcome to the Woods. We take pictures of that area to be able to prove to the IRS that it is being used as a home office. And then when we go to tax time, we can write off the square footage of that space as an expense, as a deduction against what we made. And that is something that if you own your home and you are doing work as an influencer out of part of your home, dedicate that space to being a home office, and you will be able to get a pretty significant write-off.
Yeah, so if you're just writing off part based on the square footage, how do you do that calculation? Is it done like the software we use is TurboTax, right? Mm-hmm. Is that calculation done in TurboTax?
Yeah, so all you need to do is put in the square footage of your home, the square footage of your home office, mm-hmm. and if you take what's called the standard home office deduction, that is, you're not going to write up all of your expenses related to that home office, the percentage of your utilities, et cetera, you just get a standard amount that is deducted from your taxes. Generally, that amount is probably going to be more than your expenses anyway. You're better off taking that standard home office deduction.
So, and then I know that we write off, or we track mileage, and a lot of people maybe don't think of that one. Tracking mileage when I have to run to the store to get home improvement supplies. But what about cars? Do we deduct any part of the car?
Well, the mileage is really what you deduct in terms of the car. If you have a vehicle that is purchased and owned by the business, that's a different story. But really, at an influencer level where you don't have 15 different employees that might be driving on your behalf or something like that, targeting the level of influencer that we are, where we have a personal vehicle that is used for business things, tracking your mileage is the number one thing that you can do to be able to deduct some of those expenses. And I'll also say, if you are doing something on behalf of the business, you should write it off. So let's say that you go and you're going to be decorating a room, and you drive 70 miles to go pick up some furniture. That whole trip is deductible.
And also like meeting up with other influencers, going to conferences, all of that is a tax write-off.
Yeah.
Because you're networking for your business. The other thing I was going to say is the vehicle question really highlights how gray this can become. And so this is an area where I just want to reiterate that if you can prove that it is ordinary and necessary for you to do your job, it can be a write-off. An example I would like to highlight would be if you're a food blogger and you're filming top down, your hands are always in the shot, you can potentially demonstrate that getting manicures so that your hands are clean and fit to be shown on camera constantly is part of your business expense.
Well, let's take that a step further, right? So with that food blogger, right, if you have your hands in the shot and you have a nicely done manicure, you might be posting an affiliate link to the materials that you're using to get said manicure.
Yeah, gel nail polish or something.
I don't even know what those are. But basically, like if you are using it to sell something or do something in a way that you feel like gives you a competitive advantage and you can justify that, you just need to provide evidence that you can do that, and very likely you can write it off. Now, we are not certified public accountants, so if you have one of those, you should definitely ask your accountant if you think that you can write something off. The influencer world of taxes is still really gray because, again, the IRS defines a business expense as ordinary and necessary. And if you really break those down, ordinary really means what other people in your industry are doing. And so when you have a completely new industry, we as influencers, as people who have businesses, are determining what ordinary means along the way.
Totally.
And that's why the world of influencing right now feels really gray, right? If you have a manufacturing company, right? We've had manufacturing companies for more than 100 years. It becomes really obvious what is ordinary and necessary. In the world of influencers, we haven't had big audits. We haven't had clarification from the IRS. Gather your evidence, have a case for why it is ordinary and necessary, and then decide whether or not you think that makes sense to deduct. And then talk to your accountant if you have one.
Yeah, that's such good advice. Thank you for clarifying that, because I think it is confusing for so many people in this industry. Then I want to talk about quarterly tax payments, okay? Because that's what we do to avoid having a huge tax bill, right, in April. So could you explain that, Stephen?
Yeah, and let me back up one step and then we'll get to quarterly tax payments. But basically, taxes are what you owe the government at the end of the year for the good things that happened to you, for the money you made, right? So we want to pay a lot of taxes. It means we're doing really well. But we also want to minimize the amount of taxes that we pay. We don't want to pay more than we have to. So if you owe money to the government at the end of the year, it simply means that you made more than you probably thought you were going to make. And that is a good problem to have. If you get a tax refund at the end of the year, you actually planned poorly. You do not want to get a tax refund, because what that means is that along the way, you paid the government too much money. You gave them a 0% interest loan for the amount of your tax refund. And at the end of the year, the government is giving you back that money that you overpaid them.
Yeah, I think that's such a misnomer that getting a refund is a good thing, because really you're just letting Uncle Sam keep your money, and then you don't get to have that money throughout the year to earn interest and such.
Right. And so quarterly estimated tax payments are what you do each quarter. You pay the government the amount of money that you believe you will owe in taxes for that quarter. And then at the end of the year, you actually go true it up when you do your income taxes. So what's the likelihood that you actually pay exactly what you owe? Probably zero. And so you'll either overpay throughout the year or you'll underpay throughout the year. Now, overpaying is, again, not something we want to do because we are giving the government an interest-free loan. So if we're going to go one way or the other, we probably want to underpay a little bit. Now, the way that the IRS disincentivizes you from intentionally underpaying is at the end of the year, if you owe over a certain amount, you have to pay a penalty on top of what you owe. And that penalty is a calculation based on how much you owe and how much time has elapsed. But you will not get a penalty as long as you pay what you owed last year in taxes this year. So let's say that the previous year you paid $6,000 in federal taxes. As long as you pay $6,000 this year, no matter how much money you earn, you will not get a penalty on that.
Oh, that's an easy trick to avoid a penalty basically at all costs.
Yes. And so that is what we do. We look at how much money we paid in taxes last year, we divide that by 4, we send in our quarterly estimated tax payments for that amount. We know we will not get a penalty and that we're free from that extra amount that we'd have to pay. We know how much we paid in federal income tax, and then the next year we pay that amount again. And that's really good when you are in the growth phase of being an influencer, right? As your income raises over the years, and hopefully most of you who are watching, your income is getting successively larger. You just need to pay what you paid last year and basically be 1 year behind so that you don't pay those extra penalties.
So as I mentioned, our personal experience with taxes, we are typically filing through TurboTax. We don't use an accountant. And that is just from Steven's years and years of research and his plethora of knowledge of tax law that we feel comfortable doing that. But I want to say a disclaimer that we're not tax professionals. This is not specific tax advice for you. You should always do your own work to make sure that you are doing things lawfully and following tax law. So we covered several interesting topics on tax law today for influencers, but there's so much more to go. Make sure that you subscribe and follow our channel so that you don't miss our next advice, which is going to be all about solo 401ks and different IRAs when you are self-employed. You're going to want to tune in. See you again next time.